Hello. Today we are going to talk about specifically for NRIs. NRIs, when they come to India and they become the ordinary resident, what are the important things they have to be checked, and they have to make sure that these changes they have done in terms of their investment, in terms of their bank transactions, in terms of their taxation, in terms of their what is it called, basically insurance. So these are the areas which most of the NRIs, when they come back here, they are doubtful and they have a lot of worries that they will end up paying more tax, especially people who are coming from Middle East. They don't have tax there, and when they come to India, they have to pay the tax. And there are confusions around that. They are bringing the savings from the place where they were working, and that entire money is an NRI fund. So when they come back here, they don't have to pay the tax for the entire money they brought. Whatever money they are going to make from India after the investing, on that money they are making or income they are making for the rest of the financial year, when they become the resident, for that only they have to pay the tax. So what are the, I'm not going to get into too many things, but specifically in terms of accounts, what are the changes going to happen, and investment, what are the changes going to happen, and taxation, what is the changes going to happen, and for the insurance, what are the changes going to happen. So when NRIs become resident, what will happen? Okay, so in terms of accounts or bank accounts, there will be three types of accounts. One is that foreign currency non-resident account, FCNR. This is the one account. Here foreign currency is deposited, and for foreign currency deposited, they will be earning an interest. This will be usually for 5 years lock-in, and they will be earning an interest that will be tax-free. When they become NRI to resident, that status will go, and they will be, they have to close that, and they have to pay the tax for the income generating from the deposit from there onwards. Then NRI and NRO bank account will be there. NRI means here the money will be the money earned from abroad, and they are depositing in bank in Indian currency, and if they are keeping that money as a FD, this is tax free. And this money, whatever they are investing in India as an FD, or if they are investing in mutual fund, if they are investing in shares, whatever return they are getting it, they can take back to foreign currency also. NRO account is account where they are NRIs and they have earned some money from India. It could be their rental income, or it could be they were working before they become NRIs, and that money is lying in India, and that lying in bank account, they're lying in their resident account, and that money they want to deposit, and that resident account will become NRO account. So the people who are actually NRIs, they shouldn't hold NRI account, and those who are NRIs, they have NRI and NRO account. Once they become a resident, once they come back to India, they have to convert this into resident account. And resident account also, there are two type of resident ordinary resident and resident not ordinary resident. Resident ordinary resident, it is a normal resident person, just like all of us. Their taxation will follow as a normal Indian citizen. That is, a taxation will be the same as a normal resident. And resident but not ordinary resident, there are two criteria is mentioned. You can check with your tax CA person, you will able to get it. In nutshell, in out of 10 financial year, 9 times you should be NRIs, or out of 7 years, there is a specific number, 724 or something. This many days they should be an NRI, or they should be outside India. Those are the people can be resident but not ordinary resident people. So for them, they have some tax exemptions is there. And this is important for people who have income coming from abroad even after they become Indian resident. There are people who are used to work in, let's say Europe or USA, and they have joined for any insurance policies, and they have annuity or a pension coming in. That kind of income, actually, if they are in India as a resident, they are liable to pay the tax. But if they are a resident but not ordinary resident, if there is a double taxation agreement with the country, they have a certain tax benefit is available. So in case if you are a person who come back and you are still getting the income from your foreign country, you have to check out this one, and don't do this yourself. It's take the expert help, a chartered accountant help, and do this, how this kind of things done. But you should be knowing that in case if you are getting an income after you income from your foreign country after you become the resident. So taxation point of view, it has to be checked. And taxation, you have to pay the tax for the income generated for the respective financial year. The wealth you have created from there, and it was there in NRI account. Once you become resident, for that money you don't have to pay the tax. From that money, if you are generating an interest or a profit, for that you have to pay the tax. For this, there will be an income tax slab. So that is a different topic altogether. This, if you Google it, you will be able to see that what is the income tax slab. So there is minimum thing. If your income for the financial year it's more than 2.5 lakh, then you are liable to do the income tax return. And in India, if income is more than 5 lakh, then only you will have a tax liability. Otherwise, you have a certain rebate and you don't have to pay the tax. If income is more than 5 lakh, then only the taxation comes into play. And there are a lot of investment there. You will get income tax rebate and income tax exemptions and everything. So that's a different topic. So taxation, yes, once you become resident and once the income comes, you are liable to pay the tax. And earlier, when the NRI money and in NRI, if you are depositing in as an FD, you don't have to pay the tax. If as an NRI, if you are investing in any real estate property or any shares and everything, that capital gain tax that used to be there, still going to be the same, no other difference. And when it comes to your investment, so investments usually, property everything remains same, then you will have a mutual fund or ETF, for example, Demat account is there. Okay, so mutual fund, you have to update your mutual fund house with the bank details that NRI or NRO has changed to your resident account. That information has to be updated, and that NRO and NRI status has to be converted into resident account. This you can either contact any of the distributor or contact the mutual fund company directly and get it done. And Demat account, you will have something called a PAS account with the bank, and this Demat account will be NRI or NRO. This status has to be changed and converted into resident account. This PAS account with the bank can be closed. So this is actually speaking an advantage, because here the procedure will become lesser and the cost to the bank also move away. You will have only the expenses which you have to incur for the Demat account. That is the only expenses you will have. So that is a change. Taxation, everything remains same. And when it comes to insurance, so insurance you must have bought when you are an NRI. That investment would have done it from NRO or NRI accounts, bank accounts. So those information has to be updated with your new bank account with the resident status. So these are the minimum action points in terms of your investments and insurance and bank account when you become resident from NRI. So this video, I'm sure that will eliminate a lot of questions you may have as an NRI planning to shift to India. I hope this video is useful. If you have any doubt regarding this, please contact us in the email given on the description. We will come back with the other set of video in the next episode. Thank you.